Red alert, red alert. This is ridiculous. The Fed is going to do exactly what they said they're going to do. That's it. They said they're going to do 50 bips on this meeting and the next. That's what's going to happen. There's a bunch of shocks shilling and shills shocking out there right now, and everyone's got to be careful. Oh my God. I can't even believe what I'm watching right now. All right, so I have to put out this video. It's 1:30 in the morning right here. And we're coming, it's June 15th, and at 2 p.m. Eastern Standard Time today, we're going to be getting a Fed meeting where all of a sudden, like they do every single time there's a big Fed meeting coming up, all the mainstream media just starts running with these narratives. Oh, look at the CME Group probability calculator. Look at the probability calculator right now. It says 99.6% sure there's going to be a 75 basis point rate hike tomorrow. This is all wrong. We've got some shills to uncover in this whole thing, because anybody in the mainstream narrative that's reporting there's going to be a 75 basis point rate hike tomorrow is looking for the little clicks, and I'm looking for clicks too. I mean, let's be real, but I mean, I'm not looking for clicks by like trying to like lie to the people. Like, this is ridiculous. The Fed is going to do exactly what they said they're going to do. That's it. They said they're going to do 50 bips on this meeting and the next. That's what's going to happen. What is going to happen, and you'll see from these articles we're going to go through, is they're going to talk about the potential for a 75 bip hike. Okay? So the way this whole narrative works is they're just trying to screw with retail investors, day traders, swing traders, trying to get them to move in and out of their positions. This is going back to liquidity sweeps. So there's institutions that come in and they pay these reporters money in order to write articles that sound like this, or they hand them what they think is supposedly a piece of inside information or something like that. For example, a big part of this rumor is coming from somebody at Deutsche Bank. It's like, these guys are the worst. And for some reason, we're going to sit there and like let these guys talk to us about what our Fed is going to do. Jerome Powell has made it very clear, Mr. J. Powell, he's going to do exactly what he says he's going to do. That's exactly what's going to happen tomorrow at 2 p.m. He's going to do exactly what he says he's going to do. All right. What we need to do is we need to review some of these articles right now. But before I even got into that, I'm taking screenshots, gathering up like every single one of these links for every single one of these shills that shill in this story right now. We're going to analyze it, right? Because there's a difference between just a straight shill news, report, or one that's using weasel words. If you never heard the term weasel words, it's something that they use in the news in order to kind of wiggle in between the lie and the truth. The best article I can see in terms of wiggling in between the lie and the truth is out of all of them right now is this Barrons article. We'll bring it up right now. The Fed's biggest interest rate hike in 28 years could be coming. Boom. Perfect weasel word headline. Hold on to your butts. Jerome Powell is going to do 50 bips and 50 bips in July. Some of these articles are going to be semi-right. They're going to go back in the morning. That's why I'm grabbing screenshots instead of just the links. They're going to go back in the morning and they're going to make updates to this wording. And they'll keep the article there, but it's going to change. But right now they're saying like, oh no, this is happening tomorrow. The probability is there. Like, look at the probability calculator. 2 days ago it said 2% chance. Now it says 99 point blah, blah, blah. Jerome Powell, FOMC meeting in which he said no news is good news, and he's going to give good news, which is no news. It's 50 bips. They're going to talk about the ability to maybe do 75. To be clear, right? What is going to happen is they're going to talk about what they're going to do after, because the furthest they've guided us on the rate hikes is 2 meetings, this one and the next one in July. They have not guided on September. So we're going to receive a guidance for what they want or thinking they might do in September. Now, it is not unprecedented in times like this for when they want to do a soft landing for them to go from 50 bips increases, like what the plan is, to a 75 in September. There's a precedent for that. It happened in 1994 after we had one of our largest increases in a while was 50 bips. It was, I think, 2 or 3 months after, we'll put it right up on the screen, 2 to 3 months after where they did a 75 bip. And they did actually, it's one of the few times in history they did kind of actually come in with a softish landing there. So I do see a precedent, like a probability of them, like maybe let's call that 20 to 25% probability that they could do a 75 bip in September. But it is very unlikely. The main reason it's unlikely is something I think most people don't really understand about the economic functions of Fed hikes and decreases. They take about 6 to 9 months to kick in to the economy. That means the March ones don't really hit us until September. That's why they didn't guide into September, is because they know that. So they'd rather have as much data as they possibly can and leave themselves some leeway to react off of that data. But the data they're going to be getting is only based on what the effects of their 25 bip hike was and all the hype and interest rate hiking that came from the bear market that followed this. So that's not going to be enough for them to really change course in either way. It's not going to be enough to say, we're in that much trouble, we have to go to 75. They want to do 50 bips. I've always thought that they should get higher faster because that gives them some flexibility in the other direction, just in case things don't need to be stimulated. They can be stimulated through something other than quantitative easing. They'd be able to be stimulated from bringing interest rate hikes down at appropriate times, right? So being at zero is not a good place in order to be able to manage the money supply and keep inflation in check or keep it at their 2% target, which is ridiculous. It should be zero. But I really want to get out ahead of this narrative right now because the only people that stand to lose are average day traders, swing traders, retail investors, and some moms and some pops. Those are the only people who really stand to lose from this. Every single institution knows that they're going to do a 50 bip and they're going to possibly talk about the possibility of a 75 in September. That's the course. That's the way it's going to be. And so I think I got that covered. I think you guys understand where I'm coming from, and I think you'll be happy when you see the news being exactly as it is, that you know I have your back. So here's how markets react last time Fed hiked rates by 75 basis points. This is a wiggle room article. This is the weasel words, right? So there's a rumor going around they're going to do 75 bips. So let's get on this click train as best we can by talking about a historical time when the last time this happened, and then maybe we'll even make some conjecture about how it's similar to this time, blah, blah, blah. Get some clicks, baby. All right, Wall Street Journal right here. Fed likely to consider 75 percentage point rate rise this week. That's perfect weasel word headline to fill the rumor and get yourself clicks without really actually saying some super shillionaire type of shit. And next up on this, we have CBS News. I mean, they can't be blamed because they don't even have any reporters. So they just basically, follow along with whatever anybody else is saying. So they say the Fed is about to jack up interest rates, Wall Street says. Again, that's true. That's true that, but when you get into the article, you're seeing that they're saying, analysts at Deutsche Bank said in a report on Tuesday that they expect 75 basis point rate hikes at central banks meeting both this week and in July, underscoring what they called a need for speed in clamping down on inflation. They were never quoted as saying there's a need for speed. That's basically all we got. We got one analyst that works for a bank that said, this shit's gonna happen, serious. I'm serious. Look at this little probability calendar. Look at this thing. This thing says the probability is up. That's a calculator, Calculators aren't wrong. Reuters article out on this is U.S. rate markets pricing aggressive 75 bips hike on Wednesday. First off, the markets don't price those things in. They're run by algorithms looking to pull out liquidity from the options and derivatives markets. And so they're not that smart. They're not pricing in 75 bips because it ain't going to happen on Wednesday. All right. People are just scattered and running scared because a bunch of mainstream media narratives are going out saying they're going to do a 75 bip hike. And you know what would happen if all of a sudden Jay Powell came out and said, yo, we got to do 75 today, son. Like today, man. I'm fiending for the interest rates. We got to get them bips. No. It's not going to happen like that. It's ridiculous. It's ridiculous. All right. Fed's going to do exactly what they said they're going to do, people. All right. So the CME calculator. I mean, can we hold these people accountable? I mean, can we just like have this like website just destroyed as of 2:15, maybe 2:30 tomorrow Eastern Standard Time? Can we just like, can you guys please eliminate this página de web from our internet? I mean, if you're right, fuck, color me Susan. You know, I'll color me Susan. I'll come up here, I'll make a video, say, yo, I was wrong. They fooled me, yo. They fooled me. Dude, they're definitely not going to do that, because if they were ever going to do that, they would have already done it. See, like they would have already done that shit. This is like ridiculous. All right. And this Fed watch tool is blind, son. It's blind. Here's the, so I don't even think I have that much more of a stomach for the rest of these. All right. We're going to do two more. The shillies of the shillies are here, right? And here's consumer resilience may force Fed to lift by 75 basis points. Demand has been underrated as a driver of inflation, but demand has been underrated as a driver of inflation? But now the U.S. Central Bank realizes it's time to ramp up interest rates to tame spending. So economists predict that they will consider the 75 basis points this week as it tries to bring down what looks to be worsening inflation. Yes, they're going to consider it, but like they're using these things. You read through the article, they're using this, and a bunch of people talking rumors saying that they're going to change this around and do this tomorrow. And like anybody who's saying that stuff, like, you're literally only going to cost people money from saying that, either before or after the event, one way or the other. I think you should be eliminated from the stock market. I don't think you should be allowed to play in our little game, and that's just how I think it should be. I think anybody who shills and doesn't do the best, like, and think in a fiduciary way about the people that they're talking about or giving advice about the markets should be out. There's no room for that. All right, and the last article, I'm going to cut a lot of this out. I'm going to edit a lot of this because this is boring. This is just a bunch of shilling, man, and I just find it ridiculous. I had to make a video about it. Fed likely to boost interest rates by 0.75 points this week, says CNBC, the most watched news channel about the stock market in the world. 75 bips ain't going to happen. I will guarantee that. If it goes 75, I'll cut this channel. I'll never make a video ever again. I'm just kidding. I'm going to make videos anyway because you can be wrong in these things, just like these guys. But I think this is way worse than being wrong when you're trying to do right by your clients. Like if they do 75 tomorrow, I'd be wrong. But God, wouldn't the Fed be even more wrong than me for having done it? Like, I'll take the rap. You know, compared to what they're about to get for a rap for having done that. I mean, that would really, really set us off, because if they did that, then from there, it would just escalate down. So anyways, wrapping up the Shill report on that thing. And let's go over what I think is going to happen. There are 6 potential things that are going to occur. Okay. There is always the chance that something's going to go up, down, or sideways, which sideways means it's going to swing. It's going to go up, then down, up, and then down. So it's up, down, or sideways, and it's either 50 bips or 75 bips. What do you think? Go ahead and put your thought in the comment right now. Just hit pause, put in your comment, put in your prediction, whatever percentage chance you think that's going to happen, and we'll have a little fun with it. And here, let me just show you. This is my percentage of what I think is going to happen. All right, so I think we are highest probability that we will get a 50 basis point hike, and we will swing. By swing, I mean we will dip, come back, and then boop, 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 until we consolidate somewhere in that chain, and then we will break. We're going to either break to the up or the down at that point. It's going to rip or dip based on the options chains in general. So the overall IV is going to be high, and whichever way the market is betting, it's going to go the opposite way at that point. So the major initial event at 2 is going to be a dip, and then it will swing back and settle out, like I said. But there are going to be some other alternative events. The thing about him coming out at 2 o'clock, there's only 2 more hours for this drama to play out in the markets, and then people will mostly move on, because the biggest thing about this date is the uncertainty. That's why everyone's trying to, like scavenge for clicks about this conversation and talk about whatever they can to sensationalize it. It's after a moment of uncertainty, the markets tend to chill out. Be like, all right, well, we know what's going on. We know what's happening. There's no more of the hype monster coming up. We know Jay Powell's going to do exactly what he's going to do. And we already know our QT cycle. And now we also know whatever's going to happen in September, what they're considering. In that sense, the only real negative news that could come out of it is them considering doing 75 bips in September. And that's honestly just the type of news that they need just to swing and do the liquidity sweeps. So this is when algorithms will kick into high gear because of the volatility. They'll spread out the bid and the ask prices, and they'll gobble up levels of buyers and sellers and just chomp them up and down. Just watch the volume profile on any of the major indices and pick their like relevant ETF, like the Qs or the SPY, and look for the volume profiles there, and then watch the liquidity sweeps happen, because that's what I believe will happen. 90% chance it's going to do 50 bips and swing. I'm doing 5-5 with my last 10. All right, I'm doing 5-5 with my last 10. I know that's kind of cheating. It's going to rip on the 50 bip. 5% chance it's going to dip on the 50 bip. But you guys know what I really think. So thank you very much. I got to go do all this editing and everything. Clip out every time I went blah, 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 and move on. But I wanted to calm everybody down. And like, comment, and subscribe. Let me know if you appreciate getting heads up like this. What I want to do is be able to call things out before they happen, right? Because it's the uncertainty that they swirl around in the mainstream narrative that really makes people lose money, and that drives me bananas. BANANANS. All right, people. Peace. Holy crap, people. This just in. They almost got me trapped in their own lie, just from like basically assuming that at least they were able to look back historically and get the information correct, and not at least lie about like historical data. That's bullshit. All right. Sorry guys, I'm in my normal clothes. I got out of the shirt and tie. I thought that'd be fun to wear for a minute, and I'm clipping in with a last minute announcement. I was gathering all the materials, screenshots, data, and I decided to do a little bit of double checking myself in general and actually seeing from the Google search if it was actually correct. So I went to the Fed chart and check it out. even lie about that. I know they can find ways to lie about what they think they're going to do in the future, because you can always kind of edit that and change it around and always say, well, nobody knew. Well, nobody knew, but you freaking knew. You freaking knew. All right. All right, people. Be sure to like, comment, and subscribe again, and I'll be out